Good morning and welcome back to Morning Markets from True Potential. Paul Durrance, Investment Director, and I'm delighted to be joined by my colleague Kevin Kidney.
Good morning, Paul.
So let's kick things off by looking at how stock markets behaved over the last 24 hours.
Broad-based weakness yesterday, Paul, and we can really put that down to one event, which was a speech from US Federal Reserve member Governor Brainard.
Brainard's one of the more hawkish members of the voting committee. Why is there so much attention on what she's saying?
Well, Governor Brainard's voice is more powerful within the committee, A, because she's a permanent voter, and B, because she used to be quite dovish, right. But she's materially shifted her view on the back of US inflation. And the words in her speech resonated because in describing expected balance sheet unwind, Governor Brainard chose to use the word rapidly. So that is when the Fed get ready to start selling the bonds that they have bought over the last years back into the market, they're going to do that at quite an aggressive pace. And that's what startled markets because it's very difficult to price that. There is as yet an unspecified quantity of bonds to be sold every month. So markets are in effect pricing the worst. And this complements the expected interest rate increases we can expect from the Federal Reserve. Markets already anticipate interest rates going from 0.25% to about 2% through the summer. So that's one of the fastest paces of policy tightening we've seen in 20 years. And the balance sheet unwind compounds that worry.
And I suppose we'll read more about it today with the Federal Reserve minutes. So these are the minutes produced after the Monetary Policy Committee meeting that took place a few weeks ago. So we'll be watching out for that. Turning to economic data, what caught your eye yesterday? So
we had two pieces of data since yesterday. Overnight, we've had the Cahin Services PMI from China. So this measures the activity of small and medium-sized enterprises which are largely based around coastal areas of China. Now, this measure has collapsed back into recession, a substantial decline, which is on par with what was seen in February and March of 2020 when COVID first took hold in China. Now, the reason for this collapse is the continuing of zero COVID policy in China, the severe lockdowns in the metropolitan areas such as Shanghai. As a reminder, as recently as this week, Shanghai has now been put back into total lockdown. And it matters because a city like Shanghai is a major global hub for freight. So we are likely to see continuing disruption to the delivery of global goods. And unfortunately, this is likely to exacerbate the price pressures that we've been experiencing over the last year in terms of goods inflation.
And I suppose Shanghai, population of, 25 million?
Yes.
So double that of London?
Yep.
So they're continuing with that zero COVID policy, a real difference to the rest of the world that's very much back to normal. Okay, in terms of the other piece of data, we've had services number from the US.
So the complete mirror image of the data from China is what's going on in the US. So a similar measuring services activity, and it really was a blockbuster number. So it's important because the US economy is driven by services demand. 85% of US GDP comes from the use of domestic services. And that measure yesterday for the month of March shows broad-based strength in all the sub-indicators, employment, new orders and activity. And this helps explain why the US Federal Reserve are quite hawkish in their messaging. It's because inflation is above target, but the US economy is really strong. We have levels of unemployment which are on par with where we were pre-COVID, and we're also seeing considerable strength in manufacturing and now in services. So the Fed are confident that they can cool the economy sufficiently to bring inflation down, but the US economy can remain on track and around trend growth.
Thank you, Kevin. So on the one hand, you've got weakness from China continuing with their zero COVID policy, but on the US, we're seeing remarkable strength from them. That's all from us today. Thank you for listening, and we'll see you tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.